Hey traders, welcome back to the weekly Forex Forecast. Last week was a significant week because we started to get this big breakout in the dollar index as we've been monitoring in previous weekly Forex Forecast videos. We did break the 104.98 and look at how we broke it over here with momentum. This momentum was catalyzed and it's a sign that this is going to continue higher. And I do think we're coming up to the 107.35. And when we do come up to the 107.35, we're set to see a secondary breakout, a bigger breakout to the upside above the 107.35. Just as we saw the breakout over here, we tested it first and then we broke through with momentum. Because this low over here and this higher low is simply a bigger version of the higher low over here and the breakout of this high. In other words, this is a second wave, this is a first wave, this is now in a third wave, and this is a bigger first wave and second wave. And when we break the 107.35, this will actually be in a bigger third wave. So we are looking at a major breakout to the upside in the dollar. And going into this week, dollar long plays are absolutely top of my watch list when we start to go through the watch list and have a look at the setups. These are the setups that I favor the most heading into next week. Now, the final thing to note before we move on to the scores themselves is that we do have the risks around a potential Iranian strike on Israel. How that will develop is hard to say, but US intelligence have said, on Friday that it's due over the weekend or in the next 24 to 48 hours. Now, around that, it's important to note that it's difficult to predict how these things will unfold. We just have to look at this in terms of risk, not trying to predict the future. And what that means is, going into next week, I do favor the setups that are already setting up in the data to be good trades, but that have a risk off tilt. So essentially, if nothing happens, we would be trading these anyway because the data is structuring them in a way that we should be looking for short-term trades. And if something does happen, they essentially will benefit from it. They will be catalyzed. So we're not trying to trade the event itself, just simply picking the setups that would benefit from any kind of risk off coming into the markets next week. Okay, so moving on to the market selection. And as I said, part of the market selection this week for short-term trading is going to be filtering some of those more risk-on setups and looking towards those risk-off setups so that if nothing happens, we would be trading them anyway. But if something does happen geopolitically, and of course, everybody hopes that nothing serious will happen and that, it becomes de-escalated. But on a risk management basis, we would rather be on the side of risk-off moves than have them flying our face, if something does materialize. So in terms of what we're looking at here going into next week, the standout play is the US dollar. The US dollar, we just looked at that major breakout to the upside. It shows no signs of slowing down and momentum precedes price, and that is in all probability heading towards the second major breakout area we looked at over the next few weeks. So US dollar long plays absolutely are top of my list. I am going to be looking this week at euro dollar to the downside. Notice how we're going to filter some of these safe haven assets. So risk off, what does risk off mean? It means that safe haven assets benefit and, commodity currencies tend to suffer, and then EU currencies, tend to outperform commodity currencies, but they don't outperform safe haven assets. So we don't really want to be shorting the Swiss franc, and this is actually troughing in the performance metrics anyway. We don't want to be shorting the Japanese yen, as this is also troughing in the performance metrics, and we also have the risk of intervention on this. So the yen is still off the table. Again, if you guys want to short yen, it has been still a good short recently, entirely up to you. I'm not looking at it because of the risk of intervention, and especially now with geopolitical risk, this also has the ability to catalyze the yen higher. So I don't want to be short the yen this week. I don't want to be short the Swiss franc this week. I do want to be looking at shorting the euro versus the US dollar. We're also going to then skip the shorting of safe haven assets and look at the New Zealand dollar versus the US dollar, so New Zealand dollar short. I'm also going to look at US dollar CAD to the upside and also pound dollar to the downside. And we're also going to look at Aussie dollar to the downside. Now, on balance, because of the appreciating value of gold, and we're also seeing iron ore go up, these commodities are supporting or have been supportive of the Aussie dollar. But we can still look at Aussie dollar to the downside because, the US dollar does look like it is going to outperform over the next few weeks. all of these currencies that we've just discussed here, the euro, the New Zealand, the CAD, the pound, the Aussie, and maybe even the Swiss franc and the yen. But I don't want to be short those. So that's really the top play. You know, if I don't focus on anything else other than US dollar long plays this week, that wouldn't really bother me. However, there is a secondary theme that I'm interested in. That's New Zealand dollar shorts. Now, New Zealand dollar shorts are because, first and foremost, it's a risk-on currency. And if we get kind of geopolitical issues, the New Zealand dollar should sell off. Now, it could be argued going into next week that, you know, any kind of geopolitical issues with Iran and Israel, you know, is likely to catalyze oil higher. And that's actually inflationary. So perhaps, you know, there is an argument against even shorting inflation currencies or commodity currencies next week. However, the New Zealand dollar, out of all of the commodity currencies, probably would benefit the least from any kind of spike in oil or reacceleration of inflation. So for that reason, out of the commodity currencies, I do also like the New Zealand dollar short setups, because if we get crude oil spiking, it shouldn't benefit as much as the other commodity currencies. And if we get risk off, it should actually underperform as well. So after US dollar long plays, we're going to be looking at some New Zealand dollar shorts. We're going to look at, of course, New Zealand dollar to the downside. We're also going to look at pound New Zealand to the upside, New Zealand CAD to the downside. And last but not least, there is another theme we can look at, a third theme going into this week, which is the Swiss franc versus other kind of EU currencies, because EU currencies shouldn't really be benefiting from any kind of inflation. In fact, they tend to underperform. You know, the euro, the Swiss franc, and the pound tend to underperform the Aussie, the New Zealand, the CAD with inflation. But if we put the EU currencies together, they should, generally speaking, if we get a kind of inflationary, you know, crude oil spike and we start to see the markets trading more on inflation, we should see that kind of evenly affecting the EU currencies. So they should kind of range or chop around. However, if we get risk off, we should see euro to the downside against the Swiss franc, and the pound we can also look at to the downside versus the Swiss franc. So Swiss franc long plays are my least favorite. Taking it in order, the US dollar pairs with US dollar long bias are my absolute favorite setups going into next week. That is the primary theme that I'll be looking at trading, followed by New Zealand dollar shorts. And then the third thing we can look at, although it's not my favorite, is euro franc to the downside, pound franc to the downside. Okay, so kicking off the watch list, looking at crude oil, we always start with crude oil. And going into next week, I don't know anybody who would really want to be shorting crude oil. It seems that the risk is clearly weighted to the upside, not only because crude oil is trending to the upside, but also we have those geopolitical tensions and potentially even conflict with Iran and Israel. And that would result in higher crude oil prices in all probability. So very difficult to see a situation where there is any kind of conflict between Iran and Israel and crude oil prices go down. So I only want to be buying crude oil next week. Selling crude oil is absolutely not an option for me. So what I want to be looking for is one of two things. I want to see crude oil pulling back, testing the lower bound of the 82.58, and there's a prior high over here. It's nice when the market breaks, pulls back, kind of stair steps or retest broken resistance to support. And the 82.58 is where crude oil will become oversold on the week next week. So anywhere below here, I'll be looking to buy the dip for 1 or 2 days to the upside in crude oil. And alternatively, if we start to make our way back down to the lower bound, but we don't get there, and instead of buying on the dip, the market breaks out, that's going to be the opportunity to look for a breakout and a follow through into the upper bound at the 88.61. Now, just bear in mind, crude oil could get very volatile next week. And so if you are looking at trading this intra-week, just be prepared for that volatility. Okay, so the first market we're going to look at in Forex is New Zealand dollar. This is my favorite market going into next week. I am looking to the short side. We don't really have much news coming out. We've got some CPI reports, but this is not really anything that we need to plan the whole week around. We pretty much have a clear run at the markets in terms of risk event next week. And that's not surprising because we've had a ton of risk event over the last 4 weeks. And if we're zoomed out a little bit here, you can see that New Zealand dollar has previously broken, pulled back, and it's retested this low, and then we got the big sell-off. And so going into next week, if we just zoom in a little bit further, what I'm going to be looking for is, I'm going to be looking for one of two things. Going to be looking for a pullback in New Zealand dollar, and if we can pull all the way back to the upper bound of the 0.6007, this is where if we start to break above here, we become overbought on the week. And I would be looking for 1 or 2 day reversal from above here to the downside New Zealand dollar. Alternatively, if we're making our way towards this, and this is where you want to be reactive rather than predictive, if it tests the upper bound, you can look for the short. If we pull back and it breaks out before it gets there like this, you can be reactive to that and look for the pullback and the follow through down to the 0.5865. So we're either looking to sell on the pullback, or you can look to sell on the breakout if it comes. My next favorite Forex pair is euro-dollar to the downside next week. And you can see essentially what we looked at in the US dollar, but flipped around. So you're looking at it to the downside instead of the upside. And you can see we've got this major head and shoulders pattern, which is set to break. And we've got the mini head and shoulders, which is just broken. And look at the momentum week that you get. Yes, there was a catalyst, but look at the momentum you get as it breaks through here. Very easily, we could see the same as we take out this low down here. This is on the weekly chart, and there's every reason for me to believe, as I've really been saying since September when we bottomed, but of course these things take time, there's every reason for me to believe that this is coming back down to the low in the near future. So if you drop down to the 4-hour chart, you can see this was the breakout, that kind of mini head and shoulders breakout point down here, the confirmation point. And we've got this momentum sell-off. It's pretty extended, so I would be looking for a pullback and a correction. I would not be surprised to see this pull all the way back, retest the prior low, sitting right at the 1.0727, where this market becomes overbought intra-week with roughly a 70% probability. So we start to test this area. This is going to be a great place to look for a near-term short next week in euro-dollar. For short-term trading, I'd be looking for 1 or 2 days down, but don't be surprised. I mean, this is a market that if it pulls back and tests the upper bound, could probably even look to hold on to this for a bigger trade, but I'll let you guys decide how you like to manage these. And in terms of if we break out intra-week, we start to pull back and we don't test this, and I think there's a very good chance we do. But if we don't, we may actually sell off a little bit first as well, if anything does happen today or tomorrow. But if we don't come back and test this and we start to break out intra-week, I would be looking for that as a breakout trade down to the 1.05528. So I do think now in euro-dollar, we are making our way down. We're starting the journey, although it will take some time. We're starting the journey down to the major lows in euro-dollar. Next is pound dollar. Now looking at this first and foremost on a daily chart, you can see we also have a big pattern setting up, because a break below here, would make this a second wave, and this potentially entering a third wave to the downside, this being a one wave. And over here, to end the second wave, we have this kind of double top, which has broken and has now confirmed below the 1.2517 roughly. So bigger picture, technically, we are also starting a major reversal in pound dollar to the downside. So going into this week and dropping down onto the 4-hour chart, what I'd like to see is I'd like to see this market pulling back, retesting the 1.2517. But if we could pop through here, because don't forget, we're looking at an intraday chart here on the 4 hours, and this pattern breakout, the 1.2517 roughly, this low, is actually a bigger picture. It's a daily or weekly breakout. So just in terms of volatility, we could very easily pull back, breach the 1.25170, and then also take out the upper bound at the 1.2560. So if we do that, I would be looking for a reversal in pound dollar to the downside, 1 or 2 days as a short-term trade. But also, again, because we just looked at the bigger picture view, if this is just starting a bigger breakout, these are setups. You could, if you so wish, and you have the ability to manage long-term trades, these are trades that could very easily start to break down and maintain their downward moves for the next, few weeks, few months even. So we are focused on short-term trading, however, here, and any pullback would be viewed as the opportunity for a short. If we pull back and we start to break out intra-week, maybe we test the 1.2517 and we just start to break down like this. This would be the opportunity for a follow-through intra-week trade down to the 1.2338. Now remember, you're not going to capture all of these moves, but by having a number of setups on your watch list, you can reactively try and capture 2 or 3 or maybe more during a week, but you're not going to capture all of these setups. Next is US dollar CAD. So I do like the previous dollar pairs more than US dollar CAD, simply because if we do get a higher oil price, this would be somewhat supportive of the Canadian dollar. However, the Canadian dollar is not crude oil. The Canadian dollar is a separate asset to crude oil. So I do still see the US dollar outperforming the Canadian dollar. What I'd like to see is any pullback in this market, and you can see we've just broken out of a very, very, very choppy range with momentum. Any pullback would be viewed as the opportunity to look for a breach of the 1.3667. And if we do that, I am going to be looking for a 1 or 2 day reversal to the upside. Like all of these dollar pairs, because they've only just started breaking out, you could, if you want to, potentially look at holding on to these for bigger moves up. But I would be looking for 1 or 2 days to the upside on a short-term basis. And if we get close to the lower bound, but we don't test it, and we start to break out beforehand with this kind of bull flag pattern, I would be looking for a breakout and a follow through into the 1.3878. Now, once you breach this intra-week, you have roughly a 30% chance of continuing higher. So it is a good intra-week profit-taking target once you start to push above the upper bound in this market. And the final dollar pair is Aussie dollars to the downside. Now, I do think Aussie dollar will continue lower as we get kind of the dollar moving higher, but the Australian dollar does benefit from inflation. You know, iron ore going up and also gold going up. These are assets which are going to be supportive of the Aussie. So very similar to crude oil going up being supportive of the CAD, and I still think the dollar will outperform it. It may be the case that the CAD and the Aussie fare slightly better than, say, the euro or the pound, and that's why I like those shorts better than Aussie dollar and US dollar CAD. But going into next week, any pullback in this market is viewed as an opportunity to look for a breach of 0.65380, and this would be where I'd be looking for 1 or 2 days down, potentially even again holding on to this for a bigger move. And any breakout intra-week, if we pull back towards this but we don't quite get there and we start to sell off like this, that kind of bear flag breakout and pullback setup down to the 0.6385. Okay, so moving on to the second theme after the US dollar long plays, and that is the New Zealand dollar short setups. And New Zealand dollar CAD to the downside, 2 commodity currencies. The New Zealand dollar is more risk on than the New Zealand CAD, so in risk off, you should see this falling to the downside. But also in a kind of inflationary risk off, this should fall to the downside because the Canadian dollar should be somewhat supported by crude oil, whereas the New Zealand dollar isn't. So any pullback in this market, and I stress, I don't like these as much as the dollar pairs. The dollar pairs are my primary go-to setups next week. But as secondary setups, any pullback in this market is viewed as the opportunity to look for a potential double top here at the 0.82460. I'll be looking for 1 or 2 days to the downside. And alternatively, if we break out before we test the upper bound, that's the opportunity to look for a follow through into the 0.81039. Now, unlike the US dollar pairs, these are not setting up for major technical breakouts. So these are not things that I'd be looking to hold on to for long periods of time, like the US dollar setups, which do potentially offer that. Now we're starting to just get those big breakouts. These are short-term setups that I'll be looking at next week. Next is Pound New Zealand. Now, Pound New Zealand is trending to the upside, and it also has a risk-off tilt. If we do get some geopolitical concerns coming into markets, this should be supportive of Pound New Zealand to the upside. And I would like to see, I mean, this is already forming a potential inverse head and shoulders down here. You can see the failure to make a low. I would like to see this coming down a little bit further, to be honest. And if we test the 2.07846, especially if we breach this, because very often you will breach it a bit, test the prior low over here, this would be an area I'd be looking for 1 or 2 day reversal in Pound New Zealand. And if we start to pull back towards this level, and instead we just break out, maybe we even break out above here. Maybe we just break out above the inverse head and shoulders breakout point like this, you know, and we pull back, that would be the opportunity to look for a follow through into the prior high and above the 2.11514. Okay, so wrapping up the Forex universe with Swiss franc long plays. Now, it is my least favorite theme out of the ones discussed next week. Again, the US dollar longs are absolutely the #1 thing I'm going to be looking at. But the Swiss franc long theme does have a risk-off tilt to it because the Swiss franc is a safe haven asset. Now, because the Swiss franc has been bearish and it's been weak because of the lower than expected CPI and inflation coming out of Switzerland, I don't want to pair the Swiss franc with any potentially strong currencies or currencies that could benefit from inflation like CAD franc or Aussie franc. So instead, New Zealand franc, pound franc, and euro franc are the assets I'd be looking at trading versus the Swiss franc given the opportunity. So any pullback in New Zealand franc next week, and this is the top of my list because I do like those New Zealand shorts, I'm going to be looking for a breach of 0.54810. If we test the high, I'll be looking for another failure and a reversal for 1 or 2 days. And if we start to break out intra-week, you can look for the pullback and the sell-off down to the prior lows over here at the 0.53710. Next is Euro franc. We already sold off quite hard at the end of the week, and any pullback in this market is viewed as an opportunity to look for a breach of the 0.98008. And this would be where I'd be looking for 1 or 2 days down in this market. And if we just continue to flag like this, because we've got some nice momentum here, and we break out, pull back, you can look for the follow through down to the 0.9658. Again, another market that should head lower if we are going to see risk off coming into markets next week. And last, and in this case also least, is pound franc, because it does make the watch list, but pound franc is my least favorite out of all the setups covered. Any pullback in this market, if we retest the highs, we start to trend, but now we're kind of chopping and we're losing momentum. If we retest the highs above the 1.1476, I will consider a potential 1 or 2 day short in pound franc, looking for this to kind of revert back inside the range. And if we start to break out intra-week, you can look for the flag, the breakout, and the pullback and the follow through into the low over here, and there's a high over here. There's a nice kind of box we have here with a prior high and a prior low, and right in the middle sits the 1.1292. So that would be a good short-term profit-taking target next week in pound franc. Okay, so wrapping up the video with gold and silver, starting with silver, because out of the two of them, I do like silver to the upside more than gold. Now, we've seen the US dollar, a kind of unique circumstance where the dollar is going up, but also we see silver and gold going up. And the reason for that is, the reason that can happen is because the dollar is depreciating in value against gold and silver because of concerns around a second wave of inflation. And at the same time, it's appreciating against other fiat currencies. So we're in that scenario where we're seeing gold, silver, and the dollar go up together. However, with the major breakout now taking place in the dollar, it may act as a bit of a headwind for gold and silver finally. It doesn't mean I want to be short gold and silver. I still want to be bullish on both of these assets on balance. So any pullback next week, I am going to be looking for a potential breach of the 26.68, especially if we push down and test this low. It's going to be a place to look for a potential buy the dip for 1 or 2 days up. And if we start to break out intra-week as we've been doing, we've been kind of consolidating, then you get the breakout. There's a classic example of this kind of consolidation, a break, a pullback, and then a follow through. If we get this kind of breakout, pullback, we can look for the follow through into the 29.09 and probably onto the prior high in silver. And last but not least, gold. I do like gold to the upside still. We had this kind of sell-off, and it doesn't surprise me. We had a massive rally in gold. Maybe this needs to correct. But on balance, I do still favor long positions in gold only. I do not want to short this. So any pullback next week, and there's a good chance it does come back, test the lower bound, probably breach it. There's a low and here's a high, so we've got a kind of box over here, an area we could kind of trade into. So we become oversold on the week. Take out this area here, and this is where we can start to look for a potential 1 or 2 day reversal in gold. And of course, if we fail to get to the lower bound, instead we break out intra-week and we pull back. This is an opportunity to look for a follow through into the 240211, and again probably onto the prior high here as well in gold. So that is it from me for today, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the GMT training room each day, where I look at the best markets as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge Hedge-trading app used in today's video by heading over to www.hedge-.com.